Let's take a look at some charts and information on Litecoin for brave new coin. So Litecoin is a proof of work network, which means I can look at all of the fun metrics I can for Bitcoin. Litecoin is a fork of Bitcoin with 4 times lower block times and 4 times higher eventual total coins in circulation. This is the hash rate difficulty for Litecoin, which has increased pretty substantially since October 2020. Some of this is Doge-related mining activity as well. Both are merge mined, which means if you're mining Litecoin, you're mining Doge at the same time. This was an initiative brought forth by Charlie Lee, the creator of Litecoin, way back in the day to save Doge from certain doom and devastation because it would have been an insecure network with very little hash rate. So had it not been for Charlie Lee, the Doge explosion could have never occurred over the past few months. Overall, if you're bullish on something, you want to see hash rates increasing, generally shows and supports more hashing power as mining profitability increases. You can see when the halving for Litecoin happened in August 2019, those mining incentives dropped off considerably by half, and hash rate followed soon after. If we look at all the ASICs, the script ASICs at 4 cents per kilowatt hour, which is what most industrial miners get for electricity, all of the miners are in profit. Even the ones, even the ASICs from 2018 are in profit. I didn't even realize there's a mini Doge ASIC coming at $2.61 per day in profitability, available in July 2020. Probably a bit late at that point in time to start mining, but I'm sure they will sell lots of miners. I'm just curious what the ROI is going to be on this. I don't know what the cost of the miner is. That'd be interesting to figure out. ROI 500 days. Okay, so over a year at current prices. And, you know, when you're at the bottom of the profitability list at 4 cents per kilowatt hour, not exactly screaming a massive investing opportunity there. Very interesting play that they're releasing that miner. But you are getting, one thing this is potentially not including is both LTC and Doge fees and block rewards. The top is likely in for Doge there, I'll say it, so it's unlikely that this thing ever turns a profit. You know, it's potentially that this is just a massive money pit. If you're at the bottom of the mining stats on an ASIC that's 4 years old, or 4 years newer than ASICs that are above you, you know, hopefully you know what I'm saying here because I'm explaining it poorly, but that's just funny. Anyway, if we look at the annual inflation for all the proof of work coins, Doge is in the pink here, closely with ETH and LTC as far as around 4%, and BTC Monero sit down there at sub 1.5%, and everything else, Zcash, right, 11%. This is the problem with Zcash is how can you want to buy and hold something with 11% inflation relative to BTC and Monero, which have less than 2% inflation. You know, that is enough of a nail in the coffin for me to just ignore it in perpetuity. Even Doge has better inflation. Even LTC has better inflation. Even ETH has better inflation than Zcash, which is seeing virtually no usage across the board relative to these other currencies. I always love to stick it to Zcash whenever I can. So Litecoin positioned well amongst competition. You know, even Dash and other trash like Vertcoin and DGB relative to inflation. Transaction counts rose considerably. This was some on-chain game thing that wasn't organic in a sense that it didn't hold those highs and it happened all at once. But these highs since January held. You know, this is what you want to see in regards to organic activity. Even in 2017, we're getting higher highs week over week over week, month over month. And those are down considerably. So it says to me that the bullish speculation or the bullish on-chain activity has declined. Average transaction value is down significantly since all-time highs as well. As far as block unconfirmed transaction counts per day, relatively low at around 600. Look at ETH, look at BTC, they're in the several thousands at any given point in time. Some of that speaks to the general usage of the network, and some of that is just how the network is constructed relative to the other networks, block times, things like that. Block sizes and fees here, block sizes in the line chart, fees in the fill, and it's always important to look is the chain scaling? If block sizes are higher than they've ever been and fees are still relatively low, then you can say the chain is scaling appropriately. Now here there was clearly very little scaling measures. Transactions exploded, fees exploded. Here, transactions exploded, fees did not explode. Fees increased, but relative to everything else, not really that big of a deal. And again, if we compare LTC to Doge in fees, LTC has about 10% of the total. Doge still has 90% of the on-chain fees relative to Litecoin. So if I'm a script miner, Litecoin is just the bonus right now as far as block rewards and fees. Yeah, Doge is where the money's at right now, which tells me even more that Doge is unlikely to hold these highs because there's just so much money. All this represents money that's being raked in by the miners that they're probably going to eventually sell. So unless there's equal or more buying pressure, price will decline. You know, if I'm a script miner, I'm selling as soon as I can everything, every day, forever, because this is probably the best you're ever going to get for Doge fees, for script fees, for anything. Especially after you're getting walloped by that this LTC halving, where you lost a ton of money probably up in here if you were still mining in 2019, even with difficulty declining. At this point, you are up several multiples, but make hay while the sun is shining, right? So if I'm smart about mining here, I'm selling everything. If I'm not, you know, a Doge maximalist or something. Here's NVT, which continues to decline. So if anything, this is incredibly bullish for price. NVT is basically at a multi-year low, almost at a 2018 low. I mean, it is incredibly low. So this says the on-chain activity relative to the market cap is rather high for the current market cap, which says price is oversold. This is probably the only metric that I'm looking at besides inflation that actually looks bullish for LTC. Active addresses also look rather bullish, but they've been declining over the past few weeks. If we zoom in a little bit on the 7-day, you can see how it's sort of topped, just like transactions, and has been falling a little bit. So if you're bullish on a network, you don't want to see transactions or active addresses declining ever. Here's MVRV in the fill relative to price. MVRV is another inverse metric sort of economic utility. If on-chain activity for LTC reaches, if the market cap reaches 2x the on-chain activity, historically that has been a top in price. Basically it says price is too overbought. So this is 2, this is 4 up here, and that was back in 2014, 2013. If we look at 2017, it hit 2.5 to 3 on MVRV when the price finally topped. And recently it exceeded 2 slightly, didn't quite reach for 2.5, and price topped there. This is almost the metric of what can the market sustain relative to what's actually going on chain, right? So if market cap is 2x on chain activity, then that's been enough for people profit taking or just trading in general. LTC does have a Grayscale trust, which is currently at 775% premium, and it's likely this high because of vesting and lock-in periods for this pink sheet product, trust, vehicle, whatever you want to consider it. This isn't being sold down because it can't be sold down yet. I don't know if the vesting period is 6 months or 12 months, but this will be sold down to 0 and it will go to negative eventually. Most of these products that aren't crypto, just in general, do hold a negative premium or a positive discount, however you want to look at that, from 0 to 20% at any given time. So until we have like an LTC ETF, if that were to ever exist, just like a BTC ETF in the US, they have some sort of mandate where they have to hold a price relative to spot, whereas these pink sheets can be negative or positive at a massive degree. Now they'll get excoriated by the investors, as they have with the BTC discount. A bunch of angry people saying, why isn't this higher, right? You're collecting 2 and 20 on these products, Grayscale is, and the premium is heavily negative, but they don't have some legal or constitutional in their investing portfolio, whatever it is. They don't have to hold anything here as far as negative or positive. It's just bad press for them. So keep that in mind, that this will decline eventually. Google trends over the past 5 years for Litecoin never really broke out in a big way relative to 2017 and are now back to basically pre-breakout levels. If we zoom in over the past year, you can see we hit sort of multi-year highs a couple times, but now we're back down on Google Trends to 30 relative to 100. So that just says there's less search activity, there's less retail looking into Litecoin, which is generally bearish. It's another way to look at on-chain metrics, really, because if these are up on Google Trends, then typically on-chain metrics are also at all-time highs, prices also at all-time highs, just as it was a few weeks ago. Here is starting with technicals on the 5x MA multiplier. This is the 1 year MA in the green, and buy zones have been pretty good buys over the long term thus far. Anything below the 1 year MA has lit up green, telling you, okay, now it's time to buy. Anything above 5x, this 1 year MA, has been a sell zone. So we didn't quite reach that 600 plus level this go around, but I do like sub 124 as far as a buy zone, and we're almost there. I do think technicals lean bearish. I'll give my evidence for that, but anything sub 124 definitely looks like a buy to me based on this metric, which we probably will see rather soon along with everything else. And it's important to realize that these buy zones can last for a year, can last for 6 months, right? They can last for a long time before you get profitable. So if you're taking a high time horizon, long-term view, these have been good areas to buy, to DCA in to something, right? Looking at the 50 and the 200 cross, we're going to cross bearish here pretty soon. We've been below the 200 period moving average for quite a few weeks now, which isn't bullish. The death cross will be even more bearish once we break this yearly pivot at 165. Very likely headed to sub 100, which is basically the yearly open. You know, everything across the board looks like it's headed back to its yearly open, which is considerable downside for everything. You know, it looks like it's finding some support at the previous 2019 high, but for the most part, all of this stuff looks ready for some more doom. Not a lot of volume support here either until sub 100, and no bull div just yet, but that's something to watch for in any further drop. Here's the cloud. It's below the cloud for the first time really since September, October 2020. Had a good run, just like everything else. Time to relax a little bit. It does have a daily TKC clamp, which suggests oversold conditions in a vacuum, which says this probably doesn't go lower based on this metric alone. So one thing you can watch for, let's say this doesn't behave like a descending triangle, this doesn't continue to break down, this isn't bearish, you could watch for some random time frame, the 4 hour, 6 hour, 8 hour. On the 4 hour, it would look like a bullish breakout of the cloud. On the 8 hour, it's going to look like an edge-to-edge trade. So if this creeps into the cloud with a bullish TK cross, the TK cross is currently bearish, then you can say, okay, I expect 265 for upside, and it would be a bullish reversal at that point in time. But that only triggers when those conditions are met. Right now, the default should be bearish bias, even with this TKC clamp. I just think on everything else, every metric, on-chain metrics, nothing looks super bullish here. Even on Bollinger Band, which Bollinger himself commented on yesterday or the day before, he said we're setting up for a squeeze here, which we are, which means volatility is rather low. Expect a big move in volatility rather soon. If we're above the 20 SMA on the daily, then you can say there's a reasonably high expectation for a bullish breakout. We are currently below the 20 SMA, have been below the 20 SMA since early May. So I'm expecting a bearish breakdown in this case after this squeeze resolves. Probably within the next week, 2 weeks max, this thing is probably headed lower. But again, if you're on the bullish side of things, you want to see this break above 185 basically to confirm the bullish breakout. But as it stands right now, definitely not bullish. Here's LTC-BTC, which had a multi-month, almost like multi-year really, bull div working. Finally cracked up a little bit, but then got slammed right back down. Didn't even hit the 200-week moving average. Didn't hit the previous resistance or support turned resistance. You know, none of that, which is around 0075, something like that. So this may take another 2 years to present some sort of trade setup, but right now there's nothing there. And let's look at LTC ETH. Why not? Multi-month bull div working on there. And in a vacuum based on the yearly pivot, I'd say, okay, time to rotate from ETH into LTC. But historically, this hasn't really held highs. This hasn't really had a massive bull trend for any strong period of time. So it's hard to be super confident that this will really ever outperform ETH in a big way. So overall, everything's, bearish. I mean, it's hard not to be when on-chain metrics are declining and trend metrics themselves look more and more bearish by the day. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio. I trade for Techemy Capital on Enzyme.finance. You can send ETH or USDC, or you can just watch what I'm doing here. You can see AUM allocation trades all done through DEXs, deposits, withdrawals. You can see all of the DeFi coins I am holding or ever was holding. I've had to cull a significant number of these because they were looking like I'm saying, everything looks like it's ready for a 50% decline across the board. So that's all for this one. Like, dislike, comment, share, subscribe, and happy trading.